Joining us now is Stephanie Link, Chief Investment Strategist at Hightower Advisors and a CNBC contributor. Stephanie, good to see you. Let's start with financials. Why do you say they're cheap?
Yeah, they're cheap. I think that deregulation is totally underappreciated. We had really good stress tests a couple of weeks ago. You're going to see more buybacks, more dividend increases. We're going to see a reduction in the SLR ratios. We are also going to see the Basel endgame, Basel III endgame come to fruition. All this means is that there's more capital for the banks to buy back stocks, increase dividends, and most importantly, lend. And I do think the quarters are going to be good next week, John. And I think you're going to see an uptick in M&A, capital markets, and we're going to see an improvement in net interest income. And so the one name that I've been buying has been Truist because it's trading at 1x book with a 4.5% dividend yield.
Okay, now let's talk housing. The construction ETF's on pace for its best weekly gain since mid-January, but still down for the year, off 22% from its 52-week high. How are you playing the space?
Yeah, so I own D.R. Horton, and I like D.R. Horton because they have a lot of exposure to the first-time buyer. That's about 57% of their mix. I also think they have a favorable geographic mix in the Southeast and the South Central. That's about 52% of the mix. Numbers are already de-risked. Last quarter, they lowered numbers on deliveries, gross margins, and I think they could probably do $11 a share this year, $12 next, and they're buying back about $4 billion of stock, which is 11% market cap, and the stock trades at 11 times forward estimates. Really cheap.
Yeah, interesting, especially in a week where the ITB is up something like 5% so far. We've seen that renewed trade higher here. Finally, let's talk industrials. It's the top sector of the year for the S&P so far. It's up 14%. It had another record high today. Stephanie, you and I have been talking about industrials for years. You still like them?
I do still like them, and I actually bought a little bit of Vertiv today on the news that AWS was building out a liquid cooling system, which I do not think is a threat to Vertiv, because I do think that they have size and scale, and they have the complete end-to-end operation. The stock is down about 25% from its high. They're going to grow mid-teens revenue growth, 25% earnings growth, and margins are going to expand. They're going to outgrow the industry by 3 to 5%. I still think you want to stay on this AI data center power grid theme and buy on the dips. And then I like aviation. You know, you and I talked about Boeing in January. It was my favorite idea for the year out of every stock. And I think it's really starting to work now. A lot of momentum. Deliveries yesterday we got for the second quarter, the best since 2018. That means free cash flow is going higher. It's negative $2 billion today. I think it gets to $12 billion by 2027, and the stock is trading at 24 times price to free cash flow. Historically, it has traded at 36 times.
Yeah, that was a good call. I mean, stock's up 27% so far year to date. Do want to get your thoughts as we do go into its earnings season more broadly, what you think of the markets with the S&P and NASDAQ trading at record highs right now. Do you think earning estimates have come down too far?
I do. I actually think earnings are going to grow double digits. Expectations for about 5%. And the reason is because the economy has stayed strong. We're running at about 2.5% GDP growth. That usually equates to mid-single digit revenues and about 8 to 10% earnings growth. Throw in a little bit of margin help, then you can get to 10% plus. And I do think that the economy has stayed quite strong, and that the labor market is really what is driving it. And inflation is coming down, and some of these unknowns are kind of going away with regards to tariffs and that sort of thing. So I think, you know, you want to carefully be buying here because we've had a nice run from the lows, up 25%. But on days where certain sectors that are my favorite that get hit, that's where you buy that's where you see the opportunity and you do the buying.